Hi there, welcome to Kneppy Invest and welcome to the 28th of July 2025. Time is currently 2:54 p.m, so about 1 hour and 15 minutes left of trading today on a fairly bad day for uranium, in particular one company. One company share price down about 40% on the quarterly numbers, and this is the whole reason I like to have a look at Appendix 4Cs, Appendix 5Bs, quarterly updates from companies, because situations like this occur quite commonly. Share price down 40% for the stock of the day, which of course is Boss Energy. I am going to say I'm a little bit surprised. Boss Energy is down 40%, and I've been thinking, is this a significant overreaction from the market? Remains to be seen. So we'll have a look at that company later in the video. Otherwise, we'll have a look at the top and top and worst performing sectors, indices, and companies on the ASX today. Then we'll have a look at the top 5 stocks of the day. Of course, Boss Energy number 1. A few interesting, good announcements among the rest of the top 5. Also have a look at the chart of the day. And I just picked one at random. Aussie Broadband. Aussie Broadband. And before all that, I'll just mention that I have actually sold some companies today and bought one company. So let's do that first. So I have taken profits with Botanics. So I bought at 14.5 cents and I decided to sell at 17.5 cents. Now, if the share price is like 20 cents, I'm going to be ticked off. So let's have a look at Botanics. Oh, it's down. It's down. 16 cents. So share price got to a high of 18 cents today. That was my target for Botanics. Don't really want to play these sort of catch the falling knife sort of scenarios, but I did think the market had overreacted and there was a chance of a nice little bounce. We didn't see a really good bounce, but I got enough. I got a 20% return in that trade, and it was actually a fairly big trade. I put more money into Botanics than I usually would like to do. But I got my 17.5 cents. There you go. I have no idea which way the share price is going to go from here. It could go up, it could go down. The company also released their Appendix 4C today. Nothing significant in the Appendix 4C, but I do think there is a chance that the share price will remain suppressed for a while until they can prove that the gross to net will increase. They have mentioned that they do expect it to increase to between 30 and 40%, but I think the market is skeptical. So that's Botanics. Also sold of Paladin simply because the chart's looking bad, and I think the share price is down because Boss Energy share price is down and share price is below where I sold. That's good as well. And I bought Elsight. So there was a mention, there was a comment mentioning, did I buy the dip in Elsight? And the other day on Friday, the share price actually went to a low of $1.80, and I was thinking to myself, oh, $1.80 might be nice. So I decided to buy into some Elsight at $1.79. And the share price got to a low of $1.70 and currently at $1.80. Share price could drop even further from here, or it could bounce. Don't know about this one. Not highly confident on this one, but the chart looks pretty good. I could see this going either way. So a small amount of money in Elsight. I've also put a bid in for Coronado. This is another one where I said if the share price drops to 20 cents, I might buy some shares. So I put in a bid at 20 cents. And the share price has dropped to just above 20 cents, dropped 19.2%. So share price rose significantly on Friday, 28.2%. I was thinking to myself, if the share price pulls back to 20 cents, that would be a nice little buy. Now, we have seen a fair bit of weakness in coal today, or energy. Maybe not coal, maybe coal. I can't, no. Definitely uranium and definitely lithium we've seen. That's not energy, however. Definitely uranium and lithium, we've seen some weakness today. I don't understand lithium. Why it's down, but I haven't gone through all the news flow. But anyway, that's me today. Been fairly busy, I suppose. And most days I do nothing. Okay, now let's have a look at the ASX today. Sometimes I say ASX today, but I don't think I've said it right now. 1 hour until the end of normal trading. And hopefully in the future, we have 24/7 trading. Well, maybe not. And hopefully have 24/7 trading, but companies can only release announcements during a certain amount each day, like a 2 to 3 hour period each day at the start of the day. If they get any sort of news flow during the rest of the day, they have to go into training hot and then release the information the next day. So we get all the information during a 2 to 3 hour period in the morning. That would be ideal for me. I hate when companies release price sensitive announcements at, say, 2 p.m. I hate it. In fact, one company did that today, not 2 p.m. But one company in my top 5 did release an announcement after I went away. It's just lucky I found it or saw it. Okay, so what's happened today? No surprise. No surprise here. We are up a little bit. And the whole reason, I thought TSX was up 0.5%, Dow Jones was up something like that as well. So I thought, maybe up about 0.4% as well. Negative day for small caps and a pretty bad day for resources. So I'm assuming iron ore is down as well. Pretty good day for tech. Don't know why, because NASDAQ wasn't up all that much. Up a little bit. But anyway, best performing sectors, I have a feeling energy is going to be a pretty bad performer. Let's see if it's the worst performer today. And there it is. In fact, pretty bad day for materials, utilities, and energy, and a pretty good day, very bifurcated market. So we can see, what's that, 7 sectors up above 0.75% and 3 sectors down about 1% and worse, and just the defensive sector only up 0.2%. Anyway, so I don't really want to linger on different sectors. Indices, banks up, gold's up, small caps, resources down. So ASX 20, based off this, maybe Woodside's down. Maybe a few of the more defensive companies are down, like Transurban, iron ore companies are down. So I'm going to say 7 companies down, 13 up. Oh, 15 up and 5 down, and 5 companies down: Rio Tinto, Fortescue, BHP, Woodside, and Pro Medicus. So Pro Medicus is probably not the one I would have picked, but the other 4, no surprises. And the best performing company today is Sigma Healthcare, then CSL. CSL is doing really well. Should have bought some more at 240. It's now up over 10% from there. And apart from that, what was that one company? I said Transurban might be down. And Transurban is up a little bit. Okay, no big surprises. The other thing I want to see is just any sort of these articles. Fortescue, Macquarie, most consistent ASX dividend, ETFs and LICs. I don't care. Okay, now on to the top gainers. At the top of this list, we have a company called Jcurve Solutions. This was in my top 5 stocks of the day until I saw this other announcement from this other company who released their announcement well after the start of trading. So I turfed Jcurve out so I could talk about Jcurve in the best performing, because it is, by percentage change, the best performing company. Now, in saying that, it's not the sort of announcement I would rush out and buy shares. And otherwise, or apart from Jcurve, nothing much else to talk about here. Now, maybe some of these other companies did release something like Tally Resources. For instance, Tally Resources might have released something today. Yeah, prospects for initial drill testing. Meh. Noxo Farm did release something today, I'm pretty sure. But yeah, Hercules clinical trial update number 1. I did not have a look at that. Share price is up on a fairly low turnover. In saying that, the turnover for Jcurve has been quite small, but not a lot of movement here, not a lot of interesting announcements. Helloworld is in my top 5. And Stealth Group, that's the company that did release their announcement after trading had begun, and it's moved into the top 5 in place of Jcurve, up 13.4%. So let's let's go to Jcurve. This is a small software company that hasn't done anything ever since I started following it. It's done nothing. And when I say done nothing, let's have a look. Done absolutely nothing. Have a look at the overview of this company. In fact, revenue has gone backwards over the last 3, 5, 10 years. If you have a look at the financial history, just the revenue, it's just done nothing. It's just like, nah. It's a big meh for me. So not really a company I follow all too closely. And we'll have a look at the chart in a second, and you can see why. But on occasion, the company will release something. We'll have a little look, not a close look. But today, it seems like someone is interested in Jcurve. Someone from, I think it was Colorado or Denver or Boulder, somewhere like that, has put a fair bit of money into Jcurve. It seems like the market likes it. And here we go. And Adam Riches. So he changed his name to Riches because he wants to be seen as a rich person. Now I'm making that up. Strategic share placement. So maybe Adam Riches is is a name I should know. I've never heard of him. Strategic share placement. So share price was 3 cents. I can't remember if this was done at a placement, at a premium, not a placement. So 20 million shares at 5 cents. It was done at a premium. In fact, a massive premium. Wow. There you go. You can see where the share price is up. Adam Riches, a Colorado-based investor under a binding subscription. You can see why I said binding, because binding subscription, I've just put S in front of binding. It's just the way that my brain works. Yeah, 67% premium. I knew it was a premium, but didn't really remember that much of a premium. He's the CEO and founder of NetGain Solutions. He has extensive experience within the Oracle NetSuite ecosystem. So that must have something to do with Jcurve. I don't know. Anyway, so the market likes this, and mainly because it's at a massive premium. So obviously, this guy likes Jcurve, even though this company's done nothing ever since I started following. Maybe this is a turning point. Maybe you see something, and maybe it's time to get excited about Jcurve. Now let's have a look, because sometimes a company on the ASX can do nothing, and then all of a sudden it just starts flying. That great example of that is Pro Medicus. Okay, let's have a look at the chart, and well, we'll have a look at the weekly chart first, and you can just see if now I've put all these lines in, so it's just done nothing since it listed 2013. Done nothing. Done absolutely nothing. Now, if you have a look at the daily chart, maybe you could see something to like in that daily chart. I do like the high volume, since the share price did get to below about 3 cents. Some big volume coming in, but not the company for me. And not the sort of announcement that I'm going to get too excited. Anyway, so that's a Jcurve. And if we go back to the top gainers by market cap, we have Genus Plus. What can I say about Genus Plus? Share price just keeps on going up. What else here? Reef Casino Trust. They have a casino in Cairns. They did release something today. Satire, meh. And there's nothing else here. So that means let's go to the worst performing companies, the top losers today. Okay. And at the top here, we have Boss Energy. Share price down 44.56%. I'll be honest, I'm a little bit intrigued. Oh, share price now $1.96 according to CommSec. So a little bit intrigued. The share price this low, below $2. $2 is a fairly important level, but we'll talk about Boss Energy later in the video. Other than that, Coronado is down to 20 cents. So by the way, market index is delayed by 20 minutes, and Coronado now is at 20.5 cents. So my 20-cent bid has not gone through at this point in time. What else? There's nothing else here. There's literally nothing else here. But if we go to the top losers by market cap, you can see a common theme. MinRes, which is lithium iron ore. Pilbara, lithium. IGO, lithium, and other stuff. Liontown, lithium. DPLO, uranium. Vulcan, lithium. Boss Energy, uranium. Uranium. Coal. I suppose Novonix is sort of uranium. OneView Healthcare is like one of the most overvalued small cap companies on the ASX in history. Still to understand OneView Healthcare, and Playside Studios did a capital raising. Why is lithium down? I had no idea. I had a look at lithium prices. Now, I'm not sure how quickly this updates, but lithium prices have done nothing. Then I went to Capital Brief just to have a look, and there was a bit of a mention here. Lithium miners slump as Canaccord Genuity flags improved outlook. What? That doesn't align. In fact, it mentions here, Canaccord Genuity had previously forecast a likely slowdown in global electric vehicle sales in 2025 due to tariffs, policy changes, and economic uncertainty. However, its global equity research team found that global EV sales were up 30% in the year to date. Doesn't seem like it's going badly. So these analysis said demand is now much stronger than they previously expected. They now see a much tighter market and potential for continued price improvements as demand growth overtakes supply growth. So obviously something happened today, which I haven't discovered. I just Googled lithium news, nothing. So something's obviously happened. Profit taking, I have no idea. Anyway, so that's it. That's the stocks. That's the worst performers of the day. There was nothing here, just lithium. And we already know why uranium's down. Boss Energy. So I can't find why lithium's down. apart from some good news, improved outlook. That should have seen the share price go as share price of these companies go up. Anyway. Okay, now on to the top 5 stocks of the day, starting off with number 6. And I'm not joking. This ticker of this company is 6. SIX, Sprintex. Share price up 11%. It was up much higher than this, by the way. So I actually made up my top 5 early in the day, and the share price of Sprintex was up significantly. So I thought, yeah, we'll just put this in. It sounded pretty interesting. Sprintex, $9 million contract opens China $200 billion agriculture market. Not the sort of announcement that would get me enticed by a company. Now, in saying all that, this company did pop up on my radar. Turkey supply agreement increased to 9.97 million. So they are winning these orders. I can't even tell you what this company does. I forget. So something to do with agriculture. It seems like it should be a telecommunication company. So what does it do again? Specializing in the engineering, research, product development, and manufacturing of ultra high-speed electric motors and clean air compressors. Completely different than what I would think is telecommunications. They sell wireless products or something like that. So their G series blowers are designed for high-speed air movement in wastewater treatment, agriculture, paper milling, and pharmaceuticals, ensuring efficient and reliable performance. Now, I'm not sure if it was the announcements or if it was the most recent Appendix 4C that got me interested in this company. So we're just going to go back to the most recent Appendix 4C. Now, this is 3 months old, so they should be releasing their new Appendix 4C within the next few days, hopefully. And let's just have a look. Oh, no, they're only $528,000 receipts. So still well off from being operating cash flow, free cash flow positive. So it must have been one of these agreements or contracts that made me look a little bit deeper into this company, but then I forgot what they did. Anyway, so that's 6. Sprintex. It's just a ticker code, 6. There we go. First quarter minimum order requirements valued at 320,000. So that's a fair bit for 1 quarter for a company that is fairly small. By the way, this company has a market cap, I would assuming maybe 40 to 50 million, 31.43 million. So it's not large at all. So it's fairly small. So if this company can really grow, and this is the sort of company I don't mind, particularly in this sort of space. Talking about I can't even spell the word, aquaculture. Definitely sort of a growth area. What else? The agreement includes a minimum purchase commitment for G15 series jet blowers with a total contract value of $9.3 million. There you go. So possibly this is another one of these contracts that this company has won that puts this company into a category where you need to pay a little bit more closer attention. Okay, let's have a look at the chart for Sprintex. Maybe it was a chart that I liked, or maybe not. No, maybe not. Share price has started to turn around. I can definitely understand why there's been a little bit of selling today. Nice volume, but the share price did get as high as 7 cents and has sort of been dripping, gradually going lower. Share price today got as high as 6.9 cents, so a fair bit of resistance. And that's why we've seen a little bit of selling, and there wasn't enough buying. So the enthusiasm of the sellers have been greater than the enthusiasm of the buyers today, even though we've seen pretty big volume. There's enough that one of the reasons we've seen a lot of volume today is we have had a lot of buyers, but the sellers see the share price go up and they just dump their shares on market, and that way the share price will drop. So that's enthusiasm. They just see the share price rising. They think this is dog stock. In fact, I heard this today with Boss Energy. Why don't I put so much money into this dog stock? They shareholders see the share price drop after they bought dog stock. So shareholders bought Sprintex at 6.5 cents back in October. Share price was in a nice uptrend. Share price started to drop. They go, this is dog stock. I've got to get out. And as soon as the share price gets back up to where I bought, I'm getting out. And that's what happened today. Okay, Sprintex coming in number 5. Coming in number 4, we have Stealth Group. Yes, Stealth Group. released their announcement at 10:54 a.m. after I went away. iPhone 17 pre-sales performance. What? This company is selling iPhones? I don't think so. Now, I did talk about Stealth Group as a potential sell just based off charting, and sometimes this can happen. Something comes in, a nice announcement comes in, and share price pops up. So I'm glad I did not sell out completely of Stealth Group. Okay, so apparently there's an iPhone 17 coming out. I had no idea. My iPhone is like an iPhone 1. No, it's not that old. iPhone Pro 17 Pro launching in 2 months. This is just Reddit. 17 Pro could get 3 surprising camera upgrades. Okay, this is just Reddit with these 16 new features. Can it do my washing for me? Here they are. Aluminum frame. Aluminium. Why is that a new? Is that really a anti-reflective display? Dynamic island changes. Wow. No idea what that is. Rectangular camera bump. Orange copper finish. Longer battery life. 12 gigabytes of RAM. 25. Okay. Most of this is just boring. Okay. So what is Stealth Group talking about here? Are they selling iPhones? No. They sell accessories to phones. So Stealth Group pleased to report significant uplift in pre-order sales for mobile accessories aligned to Apple's iPhone 17 launch, securing approximately 6 million in pre-sales. I did not realize people pre-bought mobile accessories. People are weird. Up 50% on the prior corresponding period. These orders are backed by guaranteed customer purchase commitments with revenue to be recognized across September and October in line with the global iPhone 17 release. It's funny, I'm an Apple shareholder, had no idea iPhone 17 was being released. Just shows you sometimes I don't follow companies I own for the long term or that closely. But anyway, that's it. That's really it. And let's have a look at the chart. Is now a time to get excited about Stealth Group again? I'm more keen to see their October performance. The share price is still in a bit of a downtrend here. In fact, the share price got up to the downtrend line almost perfectly today and has fallen away. Some people say technical analysis doesn't work. Yeah, there you go. Still in a downtrend, short-term downtrend. But at least it's not an urgent, I wouldn't say an urgent sell, but at least the price has remained above my sell price at around about 64 cents. Okay, coming in at number 3, we have Bellevue Gold. I have a feeling the share price has not moved. Oh, it's up a little bit. It was up about 5 to 6% on open. They did release their quarterly activities and quarterly cash flow report. I liked it. I thought, ooh, this could be good. Share price up 5%, 6%. I thought, actually nice. The only reason I didn't really take a position in Bellevue Gold is just the chart. Now, this looked really good on first inspection. So receipts of customers, 213.289 million. Operating cash flow positive, 143.98 million. And free cash flow positive by a fair bit as well. They also spent a fair bit in mine properties in development, massive capital raising as well. So cash on hand actually increased from 33 million to 151 million. Have a little bit of debt, $100 million of debt. But what surprised me was in fact, I've not done what do you call it? A chart or a graph for the cash receipts, which I usually do. But if you just go back, I wonder if they've got on the interactivity report. I wonder if they do have a nice little graph of their cash receipts. Let's have a look. Oh, looks like they might have a three-quarter. Have a hedge book, nice little graph. Well, they don't have any graph I would look at, but they have significantly increased the cash receipts. Now, I'm not sure if this was expected, but the share price did pop up on open, and there was some good commentary in here. For instance, despite the much improved performance suggests something negative is going to come after that. Quarterly gold production was impacted by a short delay. So even though their performance was pretty good, there was some negatives in there. Operation achieved monthly record. June quarter reflected much improved performance across all key aspects of operations. Gold production increased substantially. So some of this might have been expected, but maybe some of it wasn't expected. And I did read, went to Hot Copper, and there was a little bit of skepticism, put it that way. There was a little bit of skepticism in there, and I sort of understand why, because we'll have a look at the chart, and the share price has fallen, dropped a lot because I don't know why. Company has released some negative stuff in the past. Anyway, so a record free cash flow of 67 million, $30 million outflow last quarter. And you can definitely see, if we go to last quarter results, we go back to, where is it? There it is. And just have a look at the cash flow, the Appendix 5B, $70 million in cash receipts, and operating cash flow positive, only 476,000, and free cash flow negative. So a much better quarter. But the question I have is why? And the share price hasn't really, or the market hasn't really reacted. So even though saw this announcement and went, ooh, this looks pretty good, the market hasn't really reacted, but there could be a reaction maybe tomorrow. So let's have a look at the chart for Bellevue Gold. And the share price going sideways, been going sideways for a while. Nice little support maybe at 84 cents, but I'm not keen to trade this right now. There's no breakout, chart's not doing anything, so not keen for me, even though I thought it was a pretty good update from the company. And quite a few of the hot copper people were liking it as well. In fact, what you might do is say it's trading in a bit of a range right now. There we go, put it right there. There we go. So range trading between 84 cents and $1. Okay, so I was hoping the share price of Bellevue Gold would have been up, but it's not. Coming in number 3. Now, we do know that Helloworld share price is up on a trading update. Share price up 15.15%. I'm wondering if Flight Centre is up. I would assume. Oh, not that up, not up that much. What about Webjet? What's the T code for Webjet? There's Web Travel Group. And there's, what's the other one? I think it's WJL. Yeah, Webjet Group. Up a little bit, and corporate travel management up a little bit. I thought maybe some of the positive momentum in Helloworld would sort of translate to those other companies. Okay, Helloworld guidance update. This sort of sector has been, I wouldn't say under attack, but a fair bit of weakness in this sector. Helloworld did release a downgrade after their half-year results. They were expecting EBITDA or underlying EBITDA to be between 56 and 62 million. Then the downgrade, they expected underlying EBITDA to be between 52 and 56 million. In fact, if we have a look at the trade history, we probably could figure out when that update was. Maybe 13th of June. Let's have a look. 13th of June. Let's see if that is right. No. Oh, 8th of May. Maybe. 8th of May. No, share price was up. So they did release a downgrade, but it doesn't look like the market reacted all that. Unless it was on the 11th of March. But that would have been... Oh, that was results maybe. 11th of March. No, they didn't even release anything there either. It's just noise. They did release half year in January, 26th of January. And the only trading announcement they did release was on the 8th of May. So even though they did release a downgrade, according to themselves, yeah, they downgraded to between 52 and 56. Now, as a result of various factors, Helloworld is providing a further update to our guidance, and we now expect underlying EBITDA to be between 58 and 62 million. So going back to where they originally expected, Helloworld's results remain subject to audit. Okay, we didn't have to read that bit. So passenger TTV has declined year on year due to marginally lower customer numbers, changes in destination mix, etc., lower airfares. However, so in this case, however, is a good word. Margins have improved slightly. Costs have been well managed, and we have booked a gain on revaluation of Helloworld's Webjet Group. Okay, so that's not completely positive. So you don't like to see a revaluation being the reason why you've outperformed. Cruise sales continue to grow strongly. Still don't understand why people go on cruises. Just don't understand that at all. Not for me, I suppose. Not for me. I'm being a little bit intolerant by saying that. Not for me. And our Ready Rooms business is up 110% on the previous corresponding period. No idea what Ready Rooms is, like a cleaning service. Anyway, so Helloworld's had a good day. So let's have a look at the chart for Helloworld. Is this a breakout? That's what I'm looking for. Signs of breakouts, and I don't think this is a break. Oh, well, I shouldn't have said that. This is a breakout. So the share price did plunge on when they released results on the 26th of February. And the share price is back up to that level. A nice little support at about $1.33. Share price had bounced off that 1, 2, 3, 4, 5, about 8 times. Some really big volume came through in June. That was a good sign. That could have been the bottom. And this is a breakout. This is exactly what I'm looking for. Will I trade Helloworld? I probably should, because this is exactly what I'm looking for. Anyway, that's Helloworld coming in at number 2. It would have come in at number 1 if it wasn't for Boss Energy. I typically circle companies who I think share price will go up or down. I circled a few companies whose share price did not move today, including Visan. I thought Visan share price would have gone up today, but it went down. I thought Compumedic share price might have gone up today. Oh, it is up. It wasn't up last time I looked. What else was there? Bub. I thought Bub might have moved up today. It's up a little bit. And I have a feeling DXN might be up, but I didn't want to include that in the top 5. And what else? That was it. WiseTech has a new CEO. Develop Global. I wonder if this is down. Yep, not surprising there. PPL, Pure Profile, share price down, and Clarity, share price up 3.89%. At one point today, it was up 10%. And I was umming and ahhing whether to include Clarity Pharmaceuticals in my top 5 stocks. And the main reason is because they did a placement today. And typically when you see a company do a placement, a $203 million placement, a lot of times the share price will be, the placement will be done at a pretty big discount. Maybe not pretty, like maybe a 10% discount. So I was going, I wish this was like a capital raising to you and me, because then we can buy shares at a cheaper price. But then $203 million at $4.20, which was a slight premium. Yeah, it's a slight premium to where the share price was the previous day, and an 18% premium to Clarity's 15-day volume-weighted average price. So Clarity was very close to getting in the top 5. It was only up 3.89%, and that's the main reason it didn't get up, didn't get in. If it was up 10%, it probably would have been in the top 5, taking the place of Sprintex. Okay, now on to the stock of the day, Boss Energy. And share price down 42.94%. Yes, 42.94%. Okay, first of all, we'll have a look. They released board and management transition 4 days ago. Honeymoon financial year 26 guidance, activity report, cash flow state report. First thing I'm going to look at is, and this is what I do for all companies, I have a look at the cash flow report and I was like, nah. And one of the things I've realized with uranium companies recently is, why can't they generate any cash flow? Paladin was the same thing, and Boss Energy, highly cash flow negative. Now, they might change, but they are bleeding cash, even though they're in production. So I really want to see a bit of a change when it comes to that. They are bleeding cash. So I was like, meh, but maybe the market expected that. Activity report was like, meh. The main thing I'm looking for here is this. Boss beats financial year 25 production and cost guidance. That's actually good. They did better than expected. So originally I thought, 2 thumbs up for Boss Energy. Maybe the share price will go up. Then I had a look at financial year 26 guidance. And there were a few negative things in here. So they actually did lead in with they exceeded first year production cost guidance. Yes, lead with that by all means. But they also mentioned expected the mine will continue to generate positive free cash flow in financial year 26, but the mine might have generated positive free cash flow in financial year 25, but overall the company is not. They also have some guidance here, production guidance, that sort of thing, all-in sustaining costs, capital expenditure, etc., etc. And yeah, then as we go into financial year 26 plan, there were some negatives here. Now, this table meant nothing to me. I'm not sure if this was better than expected, worse than expected, but a little bit of negativity in the commentary here. So talking about production, as expected, tenure will decline from financial year 25 as existing well fields from the honeymoon domain are depleted and lower grade well fields at Keys Kalkaroo are brought online. So that was expected. Then cash costs are expected to increase compared to financial year 25, primarily due to an expected decline in average tenor. So it seems like this was all expected, but still a little bit negative. What else? Sustaining capital expenditure. Looks like that might have been a little bit more than expected, maybe. And yeah, this potentially means that additional injection and extraction wells may have to be installed, leading to an increase in sustaining capital expenditure per pound when compared to the FS and EFS. As stated above, the increased sustaining capital expenditure estimate financial year 26 is reflected in the total financial year 26 cost guidance. Anyway, there was something else here I can't remember. I went through some of the comments in Hot Copper. A lot of their posters were really shocked the share price was down. So when you see the comments in Hot Copper after market had opened, it was just, what, the share price, what's happening here? Initially, a lot of people were quite positive. Although someone said, skip the first part of positive news and jump to the well-filled comments. I didn't know what that meant when I initially saw it. So some of these comments were quite positive, but others were not so positive. And yeah, so it's actually, sometimes Hot Copper can be good, particularly if you don't really know a company all that well, and particularly when the share price drops 40%. Why did the share price drop? So I'm looking at the honeymoon financial year 26 guidance sort of, then we go to like 9, just before market open, someone just mentions futures down 18%. What the F? Down 26%. What the F, actually? And then they're blaming shorters, that sort of thing. Someone else says everyone knows sales would be down, production up, price great, cost low, building huge stockpile, but won't stop the shorts. Again, people blame the shorts. The ASX is an absolute joke. So when the share price of a company drops, oh, the ASX is a joke. Then down 35% on open. And then here you go. Yeah, this person says 35% down. What a dog stock. This was a holder. They must have sold on open because they're no longer holding. And yeah. And then when the share price has dropped a lot, they're all going, oh, buy, the buy of the year, that sort of thing. Time to buy. Easiest average down of my life. This is when the share price was like $2.20. So these are already down 10% on when they bought. So sometimes catching a falling knife is a hard thing to do. Anyway, so there's a reason why the share price is down 42.94%. And I think it has something to do with this financial year 26 guidance. The market is really disappointed. The question is the market overreacting? I have no idea. No idea. The market could be overreacting. And yeah, that's what I've got to say about Boss Energy. Now, in saying all that, $2 is sort of like a weak support level for Boss Energy. It's fallen through that. So my $2 goes all the way back to 2021. And we have seen the share price of Boss Energy actually bounce off $2 a few times. The most recent was back on 11th of March, so not that long ago. And the share price went on a nice rally and then bam, down she goes. So if the share price remains below $2, that would be a negative move. And look at the volume, massive volume today. You can't blame the shorters. Cannot blame the shorters. People need to take accountability. You bought some Boss Energy shares, share prices dropped. What are you going to do? What are you going to do? Don't blame everyone except yourself. Okay, that's Boss Energy. Now the chart of the day. Just picked at random this one out of a list of companies on my watch list for potential breakouts. So Aussie Broadband, and have a look at that. What a good guess. Aussie Broadband was on my list on Friday because the share price tried to get above $4.30 and then pulled lower. So this little dashed line is the breakout. Hopefully you can see why it's a breakout level. Now this is a ascending triangle, it looks like. Now you can see the share price struggles to get above 430, then it drops, but the low is always higher than the previous lows, which is a good sign. So we were waiting for the share price to get above 430, and lo and behold, today it's getting above 430 on some good volume as well. This could be the breakout for Aussie Broadband. That's it. Chart of the day. Well, I probably want confirmation over the next few days, but a nice looking chart for Aussie Broadband. And that is all I have for this particular video on the 28th of July 2025. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.